Almost ready. Sorry, guys. Almost ready. All right. So here's the thing. You probably think I slept in. Actually, I got up early, had all the time in the world, and, I don't know what happened. But I got my coffee, got my water, I got my baby. You're my sweet baby, so thank you for being here this morning. Let me pop the chat so I don't have to stare down through the whole video. Remember how I used to do this all the time during the video? Or I used to do this, talking over there all the time. So I'm trying to keep things up. Keep your head up, son. But for some reason, my system is slow today. Pop that up. Not the internet. I don't know what it is. So anyways, hopefully it works. Just letting it load. I guess it's my processor. It's one of the reasons I was actually behind. I restarted all my browsers. Recache, baby, recache. There we go. So how's the sound? Just any crackling or anything like that? Is that right, Hope? Yeah, Windows sent out an update for a lot of people. I know like many people that lost like a whole day of productivity. Thank you, Microsoft. You imagine how many people in America, what is that? Probably 1 million hours lost. So anyways, good to have you here. Let us begin. It is approximately 8:19 in the morning, and it is a Wednesday. We got oil inventories, we got ECB, but most importantly, we got FOMC meeting minutes. Booyah! So it's a very, very important day. I'm super excited to have you here. We're going to look at gold and oil and Bitcoin and dollar and yen and Swissy and pound and euro and ZAR and lira and peso and whatever you want, because you're the boss and I'm just a humble currency coach. So let's go. So let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small. Stay humble, focus on the long term, and never risk money cannot afford to lose. Oops. Let's do it twice just to make sure. All right, hey, good morning. My name is Wayne. Nice to meet you. Ow! Yeah. Throwing the sledgehammer around this weekend. Have you ever stuck your hand in a bag of Doritos with an open wound? Ow! Owie! Ouch! So anyways, good to see you guys. Yeah. So, another great day to be alive. ECB, what are they going to do? I don't know what they're going to do. They should fix their whole structure. They should probably get their banks back together and whatever. So the big news event today is the FOMC meeting minutes. Are they talking about cutting interest rates negative or not? If not, then dollar weakens. If they are, dollar strengthens. So we got a lot to do. By the way, my name is Wayne McDonald. I'm the Chief FX Market Strategist for TradersWay.com. They are the sponsor of the Forex.Today community. So if you're one of the 14,000 people that participate in our group, then please thank Traders Way. And this is how you do it. You go to TradersWay.com. In the bottom right-hand corner, it says open a demo account. Fill out the form. I'm not joking. 27 seconds later, that's all done. You're in the back office. You'll see it's all really beautiful. You can download MT4, place some trades, and you'll find out that the execution speed is fast. The spreads are narrow. The swaps are huge. If you don't want that type of account, if you'd rather have an ECN account, brother, you can have it. So tradersway.com, just do it because you enjoy these webinars every day, and give them the opportunity. That's all they're asking for, is give them the opportunity to earn your loyalty and respect. And then when you're ready to trade real money, you'll know who that Traders Way is your execution partner. So make it happen, all right? Pay it back, okay? Pay it back. Pay it back. All right. Cool. Good to have you here, everybody. This is my Traders Way account. Cool. Let me try to get this all... Does that look good over there? Yeah. Okay, cool. Keeping my eye on the chat. Where's the chat? Somebody type something in the chat. I don't see it up there. I like it when it's up there. So if that doesn't come up, I know how to fix that. All right. Cool. Yeah. Yeah. Sean. Yeah. I want to be a sage hammer. Yeah. So, yeah, good. So, yeah, here's where we are. There's two ops that we've identified. First op has worked. You'd have to be pretty aggressive. The trend is mature. Okay? And we'll see what happens after FOMC. So like I said, if the Fed even talked about, maybe, if they talked about talking about cutting interest rates negative, you'll probably see yen strengthen as well, so that'll be a little risk off. Right now, the market doesn't believe that's going to happen. So anyways, right now, lots and lots and lots of risk on. Check this out, okay? This is textbook tell you mum. Okay, very, very cool. So maybe a day ago, I guess it was yesterday, you should have taken profit. And then what this is plan A to get back in. Gee whiz, I'm not drawing well today. Plan A and plan B to get back in if you're a bull. This was a little counter trend trade, and it has failed so far. So what that means is if you're a bear, you look on a smaller time frame for a turn. It doesn't seem to be there yet. Could be. And then bulls are already in, so maybe jam your stop and pray that it breaks higher. Okay? All of that would be risk on. So, please let me know, are you risk on or risk off? What is your fundamental bias of macroeconomic conditions now and into the near future? I got you. Thank you for the reminder. It's on my mind. I had to shut down all my browsers, so let me redo that now. Bring that back up. Keep it on my mind. It's my prime directive for you. My precious jewels. Okay. MetaTraders. I got that. Okay, cool. Olin is like, hey, whatever Meta's doing. All right, cool. All right, risk off, risk on, off, on, off, off, on, off, on. 50-50. That's good. Okay, that's good. 50-50. I'm all right with that. So what if you're neither or you're both? Okay, what happens? If you're not a bull and you're not a bear, what are you? You're a pig, and what happens to pigs? Pigs get slaughtered! What? Pigs get slaughtered! Pigs get slaughtered. My kids are like, why do they make masks of slaughtered pigs? I don't know, but I got one. That's right. If you're not a bull, you're a bear. Or if you're not a bull and you're not a bear, you're a pig, and pigs get slaughtered. Yeah, just think about it. There's a factory somewhere in the world, and you're like, hey, dude, what do you do for a living? Oh, I make slaughtered pig masks. Yeah. Horrible week to trade. Oh, my God, Giselle. Some people are killing it. What are you talking about? All right. So, like, Giselle's like a horrible week. Check this out. I mean, that's the exact place to buy. That's straight out of the textbook. You're right? Swing Trading 101. And it even says get out here. Like, let's redefine this. Let's use a different chart, because you might say, Wayne, there's so many lines here. Everything means something and blah, 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 blah. All right. So let's go here. Swing Trading Bullish. Can you see that? Actually, let me do it here. Template. Swing Trading Bullish Bias. You see that? You want to see this? Okay, now I got to zoom in. It says, look, here's the green zone. You buy it. Check this out. I have to back out a little bit. Look what it says. Bullish profit zone. So here we are on Sunday. And on Sunday it says you should buy it if you're a bull, and you should exit right here if you're a bull. It says this is the best price to buy. This is the best price to exit. And we knew that on Thursday and Wednesday and Tuesday of last week. So whoever said horrible week, well, it can't be horrible, because if you're a bull, you had a perfect entry and a perfect exit. But if you're a bear, it's not horrible, because you didn't get an entry this week, and so therefore you didn't lose any money. That can't be horrible either. Okay? Oh, your customer says, is this already on MetaTraders? No, but I'm giving this template away to all MetaTrader customers for free. I'm updating it right now. And in version 2.0 of that website, when you log into your back office, instead of getting 200 files you have to install manually, we have an installer that will do it all for you automatically. It doesn't work for MT5 at the moment, but I'm going to release MT4. And for some reason, I have to talk to a different developer. For some reason, it ain't working on MT5. The files should be working and everything should be working. It just ain't working. So maybe in a day or two, I'll just pay some other people money and they'll figure it out and get that done. But MT4 is hot to go, HOTTOGO. Okay. So yeah, that'll be out the door for you maybe today. Compliments of the firm, no need to pay more money and all that kind of stuff. Very happy. Okay. Okay. Cool. So la-di-da-di-da. So that was, let me finish my thought here. This is important, okay? The plan of the week was here to here if you're a bull. Anything beyond that is unreliable pips, unreliable technical analysis, because that's beyond the scope of the plan. That's beyond the scope of normal. And when things are less than normal, that means additional risk. Okay? So like the basic boring, standard swing trade, enter here, enter there, and you're done. Okay? Now a bear that had a chance to front run this last Friday, and they would have shorted here, and it would have failed. They would have only been correct for one entire day. That's a pretty good wrong. Okay? I made money for 24 hours and I broke even. That's the best way to be wrong. Cool. And if you're a swing trader and you're bullish, there are probably 3 other trades that would have worked fine. Okay? So it shouldn't have been a horrible week. It should have been an awesome week. Okay. So let's go here. Let's check gold, oil, and Bitcoin, okay? Everybody with me? Am I wrong? Or is there only 5 likes? Maybe, yeah, maybe things aren't updating, but YouTube is telling me there's only 5 likes. Is that right? $61, $62. Okay, thank you. But there's 200 people though, right? All right, so yeah, so 78 counting 81. Thank you. Come on, guys. Can I get 100? Yeah. Let me ask you, since you guys are already here too, can you please also subscribe to the FX Bootcamp channel? I got some, now that I'm getting sleep. Oh, hey, I got A's in both my classes. Class number 1, I got a 97.5 average. And the other class, I got a 94.5 average for the year, including all the papers, including all the group work, including all the written exams. Boom! My worst grade was 94.5. Thank you. Namaste. So I've been getting sleep the last week or so, and I'm starting to really get my entrepreneurial brain going. I'm interested in doing all kinds of things with you. Hey, I need the subscriber base to do it. So one of the things I'd like to do, we've talked about this in the past, is doing a book club. I want to do that. It's on my mind. I want to do that. Let's do that. All right. So anyways, let's go with Biddy. Okay. Here's the trade. Yeah. How long ago was this? I guess Tuesday. I was describing to you how you can move up your base and remain bullish as long as you're above your base. As long as you're above your base. As long as you're above your base. Okay. So right now, we're still on our base and not making lower lows, but trying to make a higher high. If you don't like doing this, this is actually what oscillators do for you. Okay. JSL says, what would you say to a new trader who finds all the moving averages confusing? You need to take the video training courses so that you are no longer confused. Yeah, that's right. If you have an ECN account, that particular indicator won't work. I don't know why, but that's the truth. So let's say you're like, Wayne, I don't get what you mean by moving your base. What do you mean by integrity, the integrity of trend and all that kind of stuff? What do you mean? Well, if you don't get it, you can do this. Here's one way of solving that problem. Going to stochastics. Okay. And stochastics kind of does the same thing. Okay. What this is showing is it's not making higher highs, but it's not making lower lows. So Stokes is kind of telling you it's neutral, but not bearish. Okay. And it's actually crossed up. So it's slightly bullish. Okay. Which, if you were a buyer of Bitcoin on smaller time frames, you could say, well, it's struggling, but it ain't bearish. And that's you know, important information. Mohammed, you have to wait until you get the email that says, congratulations, your account's been upgraded for free. Thank you for being you. So just wait, dude. Hang on. You made it work just changing the code instead of USD. I had to put USDI. Oh, so you have to go into the code? Oh, I'd appreciate that, Power Rangers. I don't know how I would give that to somebody, though, to say, well, if you have this type of account, right? If you have MT5, go here. If you have MT4, go there. Well, if you have MT4 but an ECN, then download this and not that. But I guess so I don't know how I could do that, but I don't know if I install it. I'd have to have 2 templates, so yeah, I don't know. No, I know what you're saying. I'm trying to say if 1,000 people, you know, it confuses. It might actually, the solution causes just as many problems as the problem. Anyways. Okay. So, okay, so that's all it's saying now. So you can remain, let's say, if you're trading Bitcoin, let's get rid of this now, because what I showed you was based on a 4-hour, and on a 4-hour I create my strategy. So on this time frame, you're executing your strategy. Okay, so here was our line. Let's kind of make it slightly level. So you're a buyer of dips, is what this is telling you. Okay, that's all. Now this is terrible technical analysis, and you saw that on the 4-hour, how technically this is range bound. Not even range bound, just sideways. It's not even ranging, it's just not going up and not going down. So that's kind of interesting. You might want to wait for a break before you get involved. Okay, well, maybe some dollar strength there. Let's get it off the 1 minute so it's not so freaky. Cool. All right, so let's go to oil. Once again, out of position, hit the target early. So this was also expected. This is an OOP, typically into a CT. The CT no go. So right now it's just up and fart around. Probably waited for the 4-hour 21. And by the way, when you're OOP, you do wait for the 4H21. Okay, that's right out of the rule book. So let's take a look and see how that played out. And yeah, it's just doing its thing. So people want to buy oil, huh? So in this case, you got to back out of this chart and say, okay, so this is basically an M2 front run play. So the actual target on this is 34.30. Come on, Bubba. 34.30 to, and it won't move for some reason. Come on, Bubba. Well, 34.30 to probably closer to 38. Guess I have to go all the way to the daily to get that. It's even higher than that. 41. So it's thinking somewhere between 35 and 40. No, EIA is 10:30, not 9:30. Okay. Okay. Good. You know what's happening here? Let me move this because we have this from yesterday's analysis. I can move it. I guess I've... Okay, I think I got it this time. There we go. Okay, so let's go to a 4 hour. Okay. We're looking at, if you're a bull, this is a buy zone. The bear zone was the reverse fib. Okay. So maybe we can clear this up a little bit, but let's take a look at sort of how we got here. Okay. Let's clear this out. Let's put this on day trading bullish. Get out of the way. Let's go more like 4 hour. Okay. And there's a buy down in here if you're a bull. Now, if you're a bear, there's a swing, or a fib here. Bear, right? This is fib war. So this is where bears will sell. This is where bulls will buy. Okay. So you have this down into an up. So it's a little dangerous. So you got to know what you're doing and what you want to do. Remember, charts don't tell you what to do. That's your job. Okay. So you got to filter all through this and say, what do you want to do? And if you're a bull, you're probably going to buy it down in here around 37, 38 off the 4 hour 21 off the daily buy zone. Okay. Okay, for that you need risk on, you need dollar weakness, you need the FOMC to say there's no way in hell they'll ever go negative on rates, that kind of stuff. Okay. And so here's what's being played. Bears sold off the roll reversal there, and bulls are going to buy off of this here. Okay. That's where what bulls would do and what bears would do. So you kind of have to play it. If you're a bull, then you are buying off the low end and you're going to attempt to take it up. Okay. I would imagine too that bears are going to try up here as well. That's their plan B. But we'll take it one day at a time. Okay. So I think like if you were trading the New York session and you're a bull, you'd be getting ready to buy it now. And you'd be buying these little moves on the 1 minute and on the 5 minute. Basically, you'd be scalping it up from the bottom. Okay? One way of looking at it is New Yorkers would log in and say, oh, it's down, so I'm going to buy it up. Yeah, Chrissy, I like variable accounts. That's what I prefer myself. So, are you a bull or a bear? Here's another way of doing it. It ends up being the same trade, but this is what I highlighted for you 2 days ago, I think it was. And then we get right back to the same analysis. This little zone here is the little buy zone. So we came within $1 of it, right? So it could be game on, is all I'm saying, if you're a bull. And you're like, Wayne, it's all red. I know bulls buy low in an uptrend. So is this an uptrend? Okay, well, we'll find out, because if this breaches and goes lower, the uptrend is over. It's not necessarily bearish yet, but the uptrend would be over. So it's like this. Think of it as an if-then statement. If it falls this low, is it still bullish? Probably not. Okay? If it will remain bullish. Okay, see how I'm asking the question or stating the facts? If this is still bullish and remains bullish, we will make a higher high, not a lower low. It's definitional. An uptrend is, right, higher high, higher low, and some up. So what will happen here is, if it's bullish, it will go up. So it will go up here. If it comes back here, it is no longer, by definition, bullish, because it will be bullish as long as it's making higher highs and higher lows. Nobody says, you know, that they like the higher high, right, higher low, and then lower high and no higher low, and all of a sudden, like, just the very definition of what an uptrend is over. It doesn't make it bearish, but it just makes it a piss poor bullish trend, right? AKA no trend. So if it's going to remain bullish, it's going to go like this. And that's what you're doing in New York today if you're a bull. If you're not a bull, maybe you want to sell high. That'd probably be a better idea for you. Okay? Now, so let's talk about that. If you want to sell high, then you're using these real bodies, and you're playing this with an oscillator, just like I showed you on the other one. Okay, and you're going to have it come up and roll over. You know how this works, so no higher high. Sorry, higher high, higher high, higher high, higher high, higher high. Pull it up, pull it up, pull it up. Okay, and now suddenly no higher high and a lower low. This next candle will cross down. Therefore, you can go into the 1 hour, and it's already started that process. Why? Because it's 4 candles ahead. Okay, so now as a bear, if you're a bear, you have just formed your lower high. Therefore, you're looking for this kind of price action the rest of the day. You got that? That's why I'm saying if this is going to remain bullish, it needs to challenge and break the spirit of those bears. Or it's just not bullish. There's just not enough, or they're wimpy. Okay? So, what does it all mean, Basil? Well, if you're a bull, you buy higher lows. And if you're a bear, you sell lower highs. That's what you're going to do the rest of the day. What do you stink? Smell like a plan? So now that you know what to do, consider me a new jack. Now that I gave you something that I know you lack, consider me a new jack. Okay. Why is it running? New York is opening, my friend. New York. New York. New York, dude. It's a market open. I'm okay with that. I I like I don't like rap where it's like I'm the world's greatest bitches and hoes and I'm driving my Lamborghini and I got all this money and I like to just sit and smoke weed all day. I don't like that kind of rap. So I liked, like Public Enemy was like, let's change the world, make it a better place. Things are unfair, things are not right, and we're going to bring it into the light. That's the kind of, like, I like the politics. Also at that same time, I liked Rage Against the Machine. It was another one, but um, and what was the other one too? There was another interesting one, but anyways, but they were talking about politics basically, right? Oh, you just wait, Hope. I got some other surprises just because I like to have fun at the end of the day, though. Okay. Okay. All right. Okay, so you guys know what to do. If you're a bull, you're getting ready to buy. If you're a bear, you're going to get ready to sell. You buy low, you sell high. Easy peasy lemon squeezy. So we did all that. You do euro dollar? I guess we got to do euro dollar. Cool. Okay. What do you notice here? Not bearish. Let's look at confluence. Gee whiz, it's jumpy today. Come on. Swing low. Yeah, well, empty to M2 to the pivot profit zone. So I'm looking at this as really overcooked. But here's the thing: you don't sell when it's too bullish. Okay. If we were day trading, I used to call this a moo trade. You might remember it from my book, but that's day trading, not swing trading. But the lesson still kind of reverberates, I think, where if it's way up here, it's not supposed to be, but that's not bearish. It's way overbought. I think what's more likely is it's going to want to tickle 110 and then probably come back around. But it might go from here to 111. So you have to do what you want to do. You have to make decisions as you go. It's very late in the move, which means the trend is very mature, and you have to be extremely careful. But look at the trade for today. It's perfect. That's a perfect day trade. Okay. We assume we're going to be challenged here, and I would also assume we're going to be challenged at 110. Okay. And here we are at 110 and a half, like a 0.6 pips above 110. So I would assume we got something like this going on. And the other assumption is bears are going to sell the psych level. Okay? So let's say you're a bear now. Okay? Are you going to sell it just before 110? At exactly 110 or slightly above 110? Hey, JSL, look, there's 35 to 50 hours of video training courses that are right now 80% off. Sorry, 76.4% off. It'll answer all those questions and so many more. Yes, of course it matters. Okay? I highly recommend you consider taking the video training courses. Okay? They're good questions and they need to be answered. You need to put the time in. Okay? So check it out, guys. It would be slightly below. Okay? So we can assume right now there's a bunch of bears right there. Like, and I literally mean orders to sell. Now, 85% of all stops are within 30 pips. So we know that all their stops are going to be about here. Okay? So here's what you need to pay attention to. If there's enough sell orders, the market's going to do this. Okay? And that will kill all bulls. If the bulls are stronger than the bears, here's what will happen. They'll hit this and it'll go pa-chow. See, it'll have to come down because there will be selling. But let's say it goes like this. It goes up, and then there's 1,000 orders to sell, so that pushes down, but then the little dip brings in 1,200 more bulls, and what happens? You offset all those guys and it goes up, but then up here, what happens? Okay, let's get rid of this. What happens up here is now you're triggering bearish stops. Remember, they're bears, so to get out of those short trades, their brokers enter long positions, and the stops up here actually propel bulls even farther up, and they get to 1.150 very quickly because the bears are actually helping them because you're hitting their stops, and they're also going long. Or to say it differently, they're not holding you down, and it just pops to the next level. So you might battle these 30 pips might take you an hour to get through, and in 8 minutes you'll be at the next level. So this will take, let's say, 1 hour to do 30 pips, and then these 30 pips will take you 15 minutes. Why? Because the bears are getting out and there's no resistance, no one holding you down. You have light weight and you just pop. Okay? Or there's more bears and bulls decide to exit. And now bulls are shorting to offset their longs. And okay, but here's how I think of reversals. You need lots of profit taking first. That's not bears selling. That's every bull getting out at the psychological level of 110. And that's a big one, guys. This could be seriously, seriously legitimate, where people down here said, you know what, I'm taking it up to 110, I'm getting out. Okay? If that happens, you will see this big downward move quite quickly. And that's because every bull is getting out, which hits other bullish stops, which hits other bullish stops, which psychologically gets other bulls out, and you get 100% retracement really quickly. If that happens, then this is what bears will do. They will draw this across, and they will sell the lower high and get a lower low. But this is where bears will enter. This is where bulls will exit. So this is bulls taking it down, and this is bears taking it down. There's a difference. You got it? And creates a head and shoulders pattern. Yeah. I just look at it as price action. I just call it a roll reversal, but yeah, head and shoulders and all that kind of stuff. Yeah. But I don't really think this is that important. That's a guide. The most important thing is a trend is supposed to be a series of higher highs and higher lows. That's an uptrend. Right? So we'll define it that way. And a downtrend is a series of higher highs and higher lows, and we'll define it that. So I'm just saying it's this. I mean, whatever you call this other nonsense, and you could have 19 different variations of this, whether this is lower low, right? Or if this is off this neckline or not this or that and the other thing, and you change it and it's 15 different names. I don't care about all of that. You hit resistance, bulls get out. That's all I care about. If the bulls are out, bears are going to get in. That's all I care about. Memorizing all these different names. Is that a head and shoulders or a crown pattern? Right? So people get like this. This is a head and shoulders. But, right? But this is a crown. And this is something else. And like, who cares? Why make it so complicated? All that is dumb. You should know where resistance is, and you should know where all the bulls are going to exit. Okay? If you don't know that, you're going to need to learn how. It's just if you can't figure out what the other people are doing, that means you haven't figured out what you're going to do. However, if you know what to do when you're a bull, you also know what to do when you're a bear. You understand? Like if you know how to trade, you know what you are going to do and why. And therefore you understand if you were a bear, what you would do if you were a bear and why. And therefore you can anticipate that's what most other people will do too. So if you hit here and you're like, yeah, if I was a bull, I'd probably look for profit taking here. And you get this snap like this. You're like, yeah, that just happened. And I don't really care about all of this. Who cares? What's relevant is you knew where the resistance is. You know where the profit taking is going to be. And now you know what a bear is going to do. You're going to say, oh my God, the bulls are so vulnerable. They all just wimped out at 110, so I'm going to sell the next lower high. And boom, you get the lower low. Is it a crown pattern? Is it a head and shoulders pattern? Is it three pregnant nuns? You know, I don't care. I don't care. All of that is just, you know, to sell somebody's book. Who cares? What matters is bulls just exited and bears are going to wait here to take it down hard. Why? They sell lower highs. That's what a bear does. Right? I'd rather you understand how the market works than memorize a bunch of stupid names and funny names. Right? I don't know about you, but I tend to get several emails a week about some cool new system with some ridiculous funny name. And I'm not interested in that. But I know if bulls exit at a complete obvious psychological level, which is also our aggressive daily pivoted exit zone, then I need to pay attention to how much profit taking there is. And if there's too much, then that uptrend is vulnerable and bears are probably going to take it down because of the vulnerability. Why? It's what I would do if I was a bear. Yeah, totally, right, Beckery? This is the #1 secret all professionals don't want you to know. It's like, oh my God. Trade like a banker. What does that mean? What do you mean? What does that mean? It's so silly. Okay, look, we're at the mean average. Very cool. So, yesterday we talked about this being elevated, right? Now we come back to the mean. This is actually, this is 1 standard deviation. No, and that's 2 standard deviations, okay? So cool. So what we know when we look at the deviations is this is really oversold. And this is really overbought. And the cool thing about this is you're like, well, how did you come up with those lines? Math. It's actually statistics. Statistically speaking, this is 68% and this is 95%. Okay? And the same thing. This is 68% oversold. This is 95% oversold. And this right in here is the average price, otherwise known as the mean. These are variations of the mean. Okay? So, what do we do here? I don't know. Okay? I don't know. If you expect it to be bearish, because you're a bear, you're going to think this. Okay? I look at where we are, and on the first day of May, we said this would be the extreme low. Okay? And this is the other area of concern. So now that we're here, I mean, there's nothing strong about the pound right now. You know, it depends on what happens today with Jay Powell's FOMC meeting minutes. But this is what I would like to see. Now, there's nothing on this chart to say that will happen. Okay? But let's go back and review what we just did on the other pair, whatever we were looking at. I don't even remember. Okay? But this is where, on this chart, on the 1st of May, we said if we hit this price, 117.40, the market has an extreme probability of reversing. Okay, that's what we thought on the 1st of May. Then on the 15th or 16th of May, we hit that. Okay, and by the way, the first minute of the first hour of the new week. Look at this. The first hour of the new month, first hour of the new week. Okay. We said if we were bulls, we would expect bears to exit. Okay? Which they did. So now we believe there's significantly less bears left. Could a bull take advantage of that bearish vulnerability? What do you guys think? What do you guys think? Will a bull try to take advantage of the bearish vulnerability? Notice the higher high. It's not just a pullback. It's actually a higher high. So what would a bull do to take advantage of that? Well, we know that bulls don't buy high. But they'll probably buy low. If you're a bull and you see that as vulnerability. Now notice, without this, it's probably irrelevant. It's the fact that you knew here that this is where they would get out, and then you observe them getting out, you're like, aha, every bear on the planet just got out. And now you're a bull and you're like, I love the fact this is a higher high, but bulls don't buy higher highs. So what do bulls buy? Higher lows. Or you wait until you spot the three pregnant nun pattern, which is this, I guess. I don't know. Okay? Okay? What do you think? Okay. And like I was saying before, after that, everything else is irrelevant if you understand. Okay? So like, if you understand this top predicts this bottom, and then we get the move off that bottom, then this is already played out. It's all irrelevant. We're not interested in any of this anymore because we're trading the future, not the past. So we did the analysis. We knew that 2.5 weeks ago, and we got what we looked for. So now we're not really interested. So now I don't have to say, well, is this a head and shoulders, or is this a crown? Is this three pregnant nuns? Like, what kind of pattern is this? Is this a Gartley? Is this a bat? Is this a wedge? Is this a... We're not interested, dude. Okay? So now all we know is 3 weeks ago. 2.5 weeks ago, we said, if we hit this price, it's going to go up. And if it goes up and makes a higher high, which it did, I'm going to buy a higher low. We don't know if you're right, and it's aggressive because the previous move was down. But if you're a bull, that's how you're going to play it. Right on. Right on, J-Tho. JT. JT, make sure you subscribe. Welcome to the family. Yeah, I've discovered a super secret, amazing new system called the Three Pregnant Nuns. If it's so easy, you can turn on an autopilot and make millions of dollars. Woohoo! Get rich on autopilot. You don't have to be smart. You don't have to have a work ethic. You don't even have to try to get rich. It just prints money for you. It should be 10. So 45 M's. You don't even need a computer. All from your cell phone. Yeah. I was on my tablet last night. I was sitting outside in the dark with my tablet, just enjoying life. I thought, oh, I should type in Forex lifestyle. And it came up with, like, I think the first 100 videos were just shit, for lack of a better word. Shit after shit after shit. I'm like, oh my God, this is terrible information. Holy crap. Holy crap. Just terrible. But they get 15,000 or 150,000 views a week. All right, well, there you go. But yeah, that's right. Like Jean-Guy paid a couple of grand. Now you can get it cheap. Right? You'd be kicking yourself to lose it, the opportunity. It's in the link. The link is below the video in the description. Claudio. All right, so what to do? What to do? I don't know what to do. What to do? What should we be looking at? What do you want to do? Are we breaching? We're not even breaching our range yet. Remember, the bottom is actually here. So this will be interesting if it breaches. I have a feeling it's going to go up to 61.5 and then down. Oh, is it FOMC's at 2? No, but it's not a meeting. It's minutes. Unless I'm really messed up. What? No. The meeting's not till the end of June, June 20th. So it's just meeting minutes. Right? We're midpoint. Or am I having a brain fart? Am I having a brain fart? Could be. Yeah. So it's not a 2, it's a 10, isn't it? Okay, I guess it's 2. Yeah. Guess it's 2. Yeah, and the minutes is what we need, but is it 2 when they release them? Man, I just assumed it would be 10. Oh, am I right? Yeah, but I know it's minutes, but so usually the meetings are at 2 and the minutes are at 10. O-Town Power, charge it by the hour. Welcome to the family, O-Town G. It is 2 p.m. though, huh? All right, cool. Thank you, guys. So, yeah, we're going to slam into this. So what do you think? You going to take it down? It's got maybe 25 pips maximum left in this juice, somewhere between 0 and 25, and I would assume some down. Okay. Yeah, what is plan? I think I'm going to take off, actually. I want to get MetaTraders done for Julie and everybody else. See, rollovers. Yeah, everything's waiting. Kiwi now has its turn. Dollar's weak. That's very good. Swissy went from weak to strong. That's not good. Yen is generally weak. So you can see that the markets are freezing up before the meeting minutes this afternoon. I think trading volume is going to get down. So people are, I think, getting out of trades, not necessarily getting into trades. So when we go back to what we were trading before or looking at earlier, like I think Kiwi dollar would be up. Wait, we had it on the other one. Anyways, Kiwi dollar went up, hit its resistance. I think there's just going to be profit taking, and then it'll come down. But it's not people buying dollar. It's just people getting out while they wait. And that's an obvious place to do it. I think Aussie yen could go up and then take a real break until we get the good news, and then it takes off. So I think we're going to go into a holding pattern. But, I mean, you should know how to trade, right? So was this the one where I said get ready to buy it if you're a bull? Right? We were right here. I drew the line and everything. So if you're a bull, you're going to buy here. If you're a bear, you're going to sell there, right? Right? Yeah, about a half an hour ago. Yeah. So it's just like, do what you got to do. Like, if you know what you're doing, it should be pretty straightforward. So now if you're a bear, you're going to look for it to sell. Bulls already did their job. So as far as they're concerned, they're done. And here's the only thing a bull would do next if we get the trading volume before the FOMC meeting. But they bought here. That's cool. So what will happen is if it makes a higher high, then they're going to buy the next higher low roll reversal. Okay? And then they'll either add another one or move their stop here, and they're done. Okay? Done for the day. Could be done for the rest of the month. Their decision. Okay? Okay? Straightforward. If you know what you're doing, you eliminate at least half of the possibilities, and that's a significant amount of possibilities where you may have lost money. So now if all you're doing is betting on trends, well, trends tend to go in one direction more often than not. So if you're betting on the trend, more often than not, you're going to be right. Not because you're a genius, but because the trend is doing its job. Maida, did you take a second shot? I know you were looking for one. D's, that's a possibility, sure. live.fxbootcamp.com? No, you have to apply and be accepted. And I don't think we're accepting new people there right now. Okay, Peccary? What do I think about Bitcoin? I did that earlier. We were kind of just neutral, if I remember correctly, on the short run. Actually, it's $1,618 down to 382. So, my pleasure. Beast? Okay, I can do Beast. I broke down Beast last night pretty hard in the live trading group. Let's see if I can find the chart we used. Wasn't this chart? Let's try the yens. By the way, can you see what I'm doing here? On the left, I have an hourly chart, and on the right, I'm scalping. See what I'm doing? So, like I've been explaining to you for quite some time now, the methodology here is called, dang it, if it will let me draw it. There we go. Okay, there's the low. Okay, new higher high, and now I wait, and I wait, and I wait. And as long as we're above this line, I'm buying. Okay, so now on the 5-minute chart, I have to wait for my ops, my opportunities. Okay, and I use technical analysis now and price action for trying to enter my trade properly. I can use whatever template I want. The fact is it's on a very short time frame because I don't need fundamentals. This is all tactical at this point. So I can look around and see if there's anything that would help me. Okay. And this says buy. Isn't that cool? So we have this down, 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 down. There's my buy zone for the day. So that was very helpful. Thank you, pivot points. Okay, and now I can zoom in even closer. And let's say on a 1-minute chart even, you look out for breakouts and pullbacks. Okay, and as long as we're above here, you're a buyer. So you look and you say, what is the next opportunity you would consider buying? Are there any psychological levels that you would like to buy as support? What else is living out here? Okay, and you mark this whole area as basically one zone. So the way I skip through that is I just do this. Okay, so there's one plausible trade. So now if it drops, I can take the next 5A cross up. Okay, now going back to this hourly chart, if it closes with a higher high, then I move my base. Okay, this represents the integrity of the uptrend. Okay, so right now I look at this and I'm like, yeah, I'm a bull. If it bounces at that price, I'm buying it. Done. Okay, you can call it a fib retracement. You can call it a roll reversal. You can call it a bounce at the psych level. You can call it whatever you want as long as you're thinking about buying it. Okay. And so one easy trigger here is if you don't want to make the determination yourself, if you'd rather do it mechanically, you could say buy the 5-8 cross up. Okay. But the thing is, the only thing in this moment you're thinking about doing is buying, and you're only buying, okay, if it bounces at that price. If it drifts through lower, what you're looking for is, as long as it's above this, whoa, what would you call it, 131.75, you're going to remain a bull. Oh, gee whiz, it's jumpy today. Okay? And that's the first opportunity if you're a bull. The second opportunity, if you're a bull, is basically defend the support. And that's a much different type of trade. Okay. So those are the two things that you're doing in New York. If it drifts, if it cuts right through this like a hot knife, cuts like a knife, then don't do anything. That's why you have confirmation. Yes, Gregory. So make sure you refresh the site. Now, if you've been logging in without that, if you're going directly somehow, then that's why you were blocked. But yes, there was a security update. But the link should work inside your back office. Okay. So what do you think, guys? Okay. What do you think? Is it going to do it? Monday, do 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 do. These nuts. Ba da 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 da. Right on. Come on now. You're not following anything I'm saying, Dees. So here's the moment of truth. Will it break? Come on, Baba. This is the moment of truth. Because if we can't get through there, that's the only thing holding us down, those silly little wicks. Well, we'll see. Hopefully it's not one of those days where we just fart around until 2. And then we're Oscar Mike. But that happens. And got to pay attention to the time. Oh, it should be fine. Sitting here watching 1 minute candles. 1 minute candles on one pair. So we're on pound yen proper. I'm going to go back to here and just show. Okay, yen is still kind of weak. Pound is one of the worst things to be trading against yen right now. So it's a very poor trade. I'm just showing you how to set up the thought process more than anything. But you can see like Kiwi yen's probably a better move, although that is at hardcore resistance, right? Pound yen is mediocre, so you'd need that to suddenly get strong. Right, so we need Bailey to say something. Hang on. Well, the thing is, I think there's going to be a full stop on Kiwi all of a sudden. Gee, Murphy. Wow, that sounds like morning in America. Oh, interesting. Now what's going on? Gee whiz. So much going on. All right. I don't see Bank of England with a live stream today. No live streams. It's funny how they wouldn't post that. No, I can't find anything on these guys. Yeah, I don't see anything. I've searched like tons of things. Does anyone have a link? I don't really see anything. I'm even checking my phone here. No, an introducing broker makes money by referring business to the broker. So I was trying to find. I mean, if someone has a link to Bank of England, maybe if I go to Bank of England. I don't see them publicizing this anywhere. I'm on the website right now. Check their RSS. It's just the same. You just posted it? I don't see it. But Google Parliament Live Commons stream. Thank you. Really? That's new.
Recovery. This bill will ensure continued access to existing markets by letting us implement trade agreements with partner countries which previously applied under the EU. It will secure continued access for UK businesses to the 1.3 trillion global public procurement market. It establishes the independent body in the Trade Remedies Authority to give our great British businesses the protection they need from unfair trade practices. Trade will be fair.
Well, at least she feels confident enough to dress casual.
And by adopting a cutting-edge digital-first
That's only the House
approach,
of Commons. No
we
one's
will be
watching.
able to give businesses the best possible support.
That's the main floor, huh?
As we recover from the economic shock of the coronavirus crisis, providing certainty and predictability in our trading arrangements will be vital to securing the interests of businesses and consumers. We will unleash the potential and level up every region and nation of our United Kingdom. Now is the time for this House to speak out against protectionism. It is time for us to embrace the opportunities that free trade and an export-led recovery will bring. I commend this bill to the House.
I now call Shadow Secretary of State, Emily Thornberry, to move her reasoned amendment, and she has 10 minutes.
Thank you, Madam Deputy Speaker. I beg to move the amendment in the name of the Leader of the Opposition and in the names of my right honourable friends. Although in doing so I am conscious that for many of us there will be a strong sense of deja vu.
That's the only thing they got on the
because
Parliament
the personnel may have
Live.tv.
changed, but we've all been here before. With the same bill, the same amendment, the same arguments. For once, the government is correct when it says that nothing has changed. And the inescapable truth remains, Madam Deputy Speaker, that this trade bill currently stands as a massive missed opportunity for the government, for this Parliament.
How massive was it?
For the last 5 decades, our trade policies have been set at European level. Indeed, there isn't a single member of this House who was in Parliament the last time the UK set its own trade policies.
Try it.
So, like it or not, this bill carries a historic significance, and that's what I want to address today. Is this bill in its current form fit to rise to its historic challenge?
It's not fit to rise to this historic challenge. It's unfit, madam. Thank you. I was going through all committees trying to find this. So, thank you.
We use those sensitivities, or you can use those sensitivities to.
How come he didn't wear his yellow shirt?
First sensitivity is around, obviously, what if the lockdown gets extended? You know, how does that affect it? Then also about the unemployment effects of the scenario. Now, however, the reason, amongst the reasons that you can't mechanically extrapolate this is A, obviously there's a lot of uncertainty around the situation. B, one of the two reasons I would pick out.
Can you hear it all right or not? Is it coming through?
Reasons for why the stress tests came out.
I think it's coming, the desktop's coming through.
Normal stress tests. Is because in our normal stress tests, we don't assume what I call the discretionary use of fiscal policy by the government. We assume normal, if you like, fiscal conditions. We let so-called automatic stabilisers operate, but we don't assume that the government's going to come riding in with special measures, if you like. Obviously, it has.
It's as loud as it goes, yo.
Sensibly. Now, obviously, going forwards, you asked your question, would have to obviously prejudge the question more. Not only would the stress continue, but what would the government response be? So you'd have to answer questions like that to form a view on what is the resilience in the banking system. What I can tell you to finish is that the result of that desktop stress test was what we call inside last year's regular stress test. So it means that the banks were not as stressed as in the stress test we ran last year, and there is margin for further pressure. But let me finish by saying, because this is often thought to be sort of a radical point, but I don't think it is. Obviously, underlying your question, there is a point, I can't be precise about it, at which that resilience does obviously come towards the end. I can't deny that. We think it's got some way to go beyond the stress, well, a bit of a way to go beyond the stress, actually, and we think there are things that banks can do. Let me finish with the other big point, I think, in the stress test, which I think, again...
Get to the point!
Banks get a better result in that stress and would continue in our assessment to get a better result in your scenario by continuing to lend. It supports the economy better, and that rebounds back into the health of the banks.
Thank you. I'm just going to come to this in a minute, but John, I know you wanted to come in. if you could briefly, please. Thank you.
Yeah, no, I'll just make 2 quick points on the price to book ratio. There are other indicators of what the market thinks about bank solvency and the quality of their assets. There's the credit default swap spread, which tends to increase when the market is worried about solvency. And then, of course, there's the price of the bank debt, particularly the bank debt that gets bailed in as banks get closer to problems. In 2008, we not only saw the share price fall, we saw those indicators go in the other direction, which indicated severe market concerns about bank solvency. That has not been the case this time. Those indicators are not suggesting the market is concerned about asset quality in the way it was 2008. That, to my mind, supports that a lot of the share price is to do with bank profitability as opposed to bank solvency. And the other point I'd make is if one wants to know how solvent the banks are and the quality of their assets, then I think in the end there's no alternative but to do a bottom-up test in the way we've done it, with a cross-check on 85,000 companies to ascertain corporate impairments, and to build it bottom-up in that way, rather than taking broadly what the market says. Because as Andrew's pointed out, the market's not always been right. It's about the quality of bank assets.
John, thank you very much. Felicity.
Yes, thank you. And can I start by thanking you, Andrew, and your team for all of your efforts during this very, very difficult period. And I know that you've all collectively put in so much. Can I start with a general monetary policy question? Would you now contemplate negative interest rates and buying riskier assets under QE?
Yes, I'll start. I'm sure colleagues may wish to come in. It's obviously a question that's getting some attention. So let me start with a very general point as well, that we do not rule things out as a matter of principle, and that would be, I think, a foolish thing to do. But can I then follow that up by saying that doesn't mean that we rule things in either? Actually, the MPC has a history really since the financial crisis. So obviously, really since the very sharp cuts in interest rates that happened in the financial crisis period, of keeping under periodic review the lower, so-called lower bound. And they've done that. The committee's done that several times since the financial crisis, with good reason. And I think, given what we've had to do in the last few weeks, it would be no surprise to learn that, of course, we're keeping the tools, therefore, under active review in the current situation. Now, the few things I'll mention on that. What are we doing, actually? Well, first of all, obviously, we're very keen to observe and are observing how the economy responds to the cuts that we have.
So you can tell that he's reading notes because there's headers above them. So what are we doing? So he's like, so what are we doing? Look at him read what he's saying.
Particularly keen to obviously to observe that, bearing in mind arguments that are made, and well made actually, that the effects of cuts weaken as you get nearer to zero bounds, and could even become counterproductive. And
question is, are the questions
we have to assess
pre-written as well? They could have just released a press release. Therefore, the five of us don't have to watch.
Measures that we can use and have used to counteract that weakness of pass-through. We implemented in March a new term funding scheme, which effectively provides medium-term funding by the Bank of England to the banks at the policy rate to reinforce the pass-through as we get down into this zone where the pass-through is a bit weaker if we leave it to its own course, as it were.
So you can tell by the shoulders of his suit, the way that they're sewn, that it's not an expensive suit. His collars on his shirt curl in.
Of that, I think if I could draw some overall messages from that, I think one is that the context in which negative rates.
His tie is old.
That's the cyclical context. Secondly,
so he might have a lot of money, but he doesn't dress like it.
The systems in which they're done is important. Each country has a different structure of its system, structure of its banking system. Thirdly, I think the communication of it, were one to go near it, would be absolutely critical. I mean, this is not a thing that, naturally, I think, if you don't mind saying so, I think members of the public would find it quite challenging to understand exactly what it is and what it isn't, because let's be clear, in countries that have used negative rates, it's quite a nuanced policy tool. It's not a straightforward policy. So all I just say
You'll
is
have
we're
to
not
take a
ruling
look,
it in,
like,
but we're not ruling it
callers
out. And
like
now's
that
the right
drive
time
me
to review
absolute
all the
batty.
tools we're using. We're reviewing, we're obviously always reviewing the effectiveness of using quantitative easing, and as you say, we will also review the prospects for the use of what sometimes gets called credit easing or the purchase of risky assets. Bear in mind, I mean, we did innovate there in March with the introduction of the commercial paper
Like someone
facility.
should have combed his hair a little bit. Someone should have done his tie straight. His shirt should be
we've got
pressed.
some of our own evidence. We've got evidence
You
from
know.
other central banks, and we are doing work on all those tools, and we'll continue to do it because we know.
No,
that,
it's
we
curving
have
in
to,
here,
we
right?
have to draw on our toolkits.
So you're supposed to have a stay.
We have that experience of having to
Do you see that?
act very rapidly.
You're supposed to
So
have
having
a.
the whole toolkit under review and assessed
So,
as the context changes is important.
It's
Thank
most
you for
likely
that.
cheap
Can I
shirt
ask you
compared to
about
his
corporate
suit as well.
indebtedness?
Oh, now I'll never
Are you
get this back in my
concerned
collar.
about the levels of corporate debt, and what effect do you think that could have on the economy
But
and
you know,
on financial
if he's a
stability?
person of power, I mean, they should
Well,
clean him
John,
up a little bit.
a few minutes ago referred to this very big piece of work that we've done in this.
I don't like how he's slouching too, and his suit's wrinkling up and stuff. Like he should be in a proper chair. You know, he should be sitting tall. That kind of stuff.
It looks at a very large number of corporates in this country and assesses their indebtedness, and the risk, frankly, is obviously we go through the shock. And we produced an assessment of what we thought the financing, requirement of those of the corporate sector could be over really effectively about the year to come. And then we looked at the sort of, if you like, the requirements, and then we also looked at the sources of funds.
So that's all.
A
Just
number of
saying,
things
if
I
you're
would draw out
an
of
important
that.
public
But let me
speaker,
make
you
one other
should.
point that's
It should be
important.
part
It's
of your
very
job.
important in thinking about the interventions.
So, like, my
that
shirt
we
is
made at
pressed,
the,
you know,
commercial paper
starch.
facility for a moment. Two things to note about that. One,
Whatever.
we have
To each
tried
his
bear in
own.
mind that the government takes the credit risk on it, so there's obviously a lot of coordination on this piece of the patch, if you like. We had a cut-off in terms of credit rating, which is pre-COVID, saying if you're investment grade or you're pre-COVID, you have access. Doesn't matter
Yeah,
what's
poor
happened
rich guy.
post that, because in a way,
Well, that's the
the
thing.
shock
Like these
that
guys,
you're
you
not
assume they're
expected
rich, but like
to take into account.
Like
If
a
you
lot
were
of these
not,
people, when you
then
see
you
their
have
homes,
access,
they're
and
not
we'll come back
rich.
to that point in a moment.
They're,
So we-
but I mean,
but we
I'm not
then lent
making that as a
out
criticism.
with
What I'm
official
saying
rates. So
is,
in a sense,
we
we're
often
taking out
just
the risk
automatically
caused by
believe
COVID.
they're rich and
That's
powerful,
deliberate.
and then you find
Absolutely.
out they might be powerful, but they're not
Now,
necessarily
going back to the
rich.
work that I referred to on the corporate sector, we think that if you look at the schemes the government's introduced, our scheme, you look at actually what the commercial banks lent in the sort of 3 months up to March, which they did a lot of lending, particularly to large corporates. It was actually record levels of bank lending for the first 3 months of this year, particularly as larger corporates drew down on their credit facilities in anticipation of, obviously, the problem to come. If you put all of that together and then add in the cash reserves, the cash balances that the corporate sector is holding with the banking system.
Is that right, Grind?
You
Why
start
would you
with a
say
figure
something
of
like
around
that?
about 150 billion pounds. You can take
That
a lot
might
of that
be
out,
the case, eh?
actually.
Made up.
But we
You
think
sacrificed
there's a number of around
as a
about
public
40,
servant,
50
I
billion
guess.
pounds, which isn't filled. Now we think some of that has actually just been filled by the Chancellor extending the so-called CL bill scheme to a wider array of corporate ratings. And
Whatever.
extending the
It's
amount
just it. He knows. He's good.
But there will still be companies who don't have access. And one principal reason for that is their condition before any of this happened.
Yeah. Well, Carlos, I'm definitely
make
guilty
two
of
final points. They
that.
were over-indebted before COVID ever came along.
I bought a bicycle.
And two things on that. One is I'm afraid they do
Should
have
be
to take
arriving on
responsibility for
Thursday.
this. I might be
So I might
sorting
do,
that out. Secondly,
Try to get some
the
exercise
need
in
for
now
them,
that school's
I think,
out
where
and summer's
that is
here.
not debt, it's equity.
Yes.
It's the answer to that situation is not more debt.
Yes.
Now, we are working, Treasury are working, Chancellor and I are in close contact on what are the options for equity. By the way,
So I'm waiting to see if he's going to say anything. Right now he's saying the banks are all right and better capitalized than before.
Even while we've been in
So-
these problems, that's encouraging.
He hasn't
But,
said
I think
anything
it's
horrible yet.
important.
But he hasn't said that he's going to do
anything. I'm in close contact with a lot of firms, also the City UK, encouraging them to say, look, we've got to have options for equity, because either those companies also
Thank you, Carlito.
taking on debt during
We were going to do that in this office, actually. It was my original idea for this space. Because of all the windows with the view of the lake, this part of the lake, I was thinking of like the elliptical machine and the treadmill and all that would go here.
So do you think that we need a formal scheme whereby we can swap debt
yoga mats on the floor, right, and a heavy bag?
I don't know whether it has to be a formal scheme, but what I do think we need
and that's what we were thinking of doing. And then we're like, let's build a home office. So that's how that went down. But I thought about it.
Do we need more? More than the sort of the regular?
Not an electric bike, no.
Because of the unique situation we're in. And you know, and I think, let's be honest, there are going to be some questions about how we balance what I might call private interest with public. There will be public interest considerations.
Yeah, I'm sorry if I'm talking too much.
Which sectors companies operate in, where they're vital to the economy, vital to society. So we've got to balance carefully private and public interest. I hope.
Probably hope. I agree.
Private sector
oxygen
with influence by the public sector rather than the public sector having to take the equity on. But we have to have those considerations in mind.
Thank you. Just one very quick question, because I'm almost out of time. You've said that it is in the collective interests of banks to lend.
That's so funny.
Do you
I'm
get
almost
the sense
out of
that
time, so
banks
you need to
are
hurry up.
prepared to use their own balance sheets at the moment to lend?
Yes. Two things on that. One, as I said, actually lending to large corporates had actually taken off before we got into the lockdown. But if you look at them, those are the published figures. You look at lending in the first 3 months of this year, it was running at something like 8 times more for a year. So it was a very, very high rate of running. And of course, a lot of that, as I said, was corporates drawing down on facilities. What was slower to take off has been well documented, was the very smallest, which are now covered by the bounce back loan scheme. The bounce back loan scheme has taken off very rapidly now. It's in place. It's the right thing to do. Chancellor and I discussed it a lot. Absolutely the right thing to do, I think, and it's been taken.
So some corporations in the UK have been using their credit facility.
Actually, now the money as well. But it did require that change, I think, to unblock the process. Now, I think, to be fair, first the banks, let me say two things. One, obviously, like all of us, they're operating under.
I'm surprised he's using his laptop microphone. Like, there's no professional, there's no tech dude that's like.
Let me be clear. I
set this up for him.
Discussed 80-20, and I mean,
it's pretty amazing, actually.
Get the right sort of balance of incentives, but the problem was, I think, that a number of.
Now, it looks like there's a bug on the wall behind him. Is that a bug?
And at 20, the banks are saying, well, we are going to apply.
Like, no joke, there looks like there's a bug on the wall.
Our tests, our standards, not fair enough. And it required that change, and it was a sensible change to make.
Thank you.
Great, thank you, Felicity. I'm going to come to
this guy's in the closet.
This does apply to all. It's
really funny.
Unfortunately, the timing is quite tight this session. To keep our answers relatively short.
Apologies.
No, not at all. There's a lot to explain. I totally understand that. Right, going to Julie, please.
Thank you, Chair. May I address
Sorry,
my
I
question
don't mean to. It's
John,
just funny.
Please. Thank you. We've talked about, and the Chair started talking about the stress test, but I'd just like to return to that in a little bit more detail, please. The desktop stress test is called, each of these words is important, the plausible illustrative scenario. So I wondered if you could just go back to that and mention why it's a scenario rather than a forecast. And equally, it's a scenario, it's not really a worst case, or how much of a worst case is it? And if we're really looking to learn and to manage these scenarios, do we not need to be more robust about saying what the worst case actually is?
Okay.
Hope it's both.
Let me try and deal with that. First, on this question of a scenario versus a forecast, and the scenario comes from the MPC, but the point applies to both committees. In my view, one makes a forecast when there is when one can take a view of the probability distribution of different outcomes around that forecast. And it's normal for the MPC to make a forecast and say, this is our best collective judgment of the central probability, and then to publish a range of the so-called fan charts, a range of outcomes around that, and then for the Financial Policy Committee to look at the less likely outcomes, whereas the Monetary Policy Committee looks at the central one. I think that the judgment for both committees was that this pandemic, the way it's playing through the world economy and the UK economy, and the public health measures that are necessary to contain it through time, and the chance of a second wave or a third wave, of a vaccine, of an effective remedy, we don't really have the normal experience of risk to take a risk-based judgment on those things. It's the difference, if you like, between uncertainty, where one is truly uncertain about the outcome, and somewhere where you have an experience of things having happened in the past, and you can make an assessment of the likelihood of the risk. Risk assessments are difficult, but you have something to base them on. Uncertainty, one basically doesn't know. I've learned through this crisis that epidemiologists find it as difficult to agree as economists, which I suppose is understandable, but not entirely reassuring. So for us to make a
So he doesn't know,
probabilistic
and he's not going to
forecast of this is the central part,
He's not going to
I
try.
think it's very difficult, and we would be depending on medical assessment that we can't easily make. And as I say, the health profession is by no means certain, and also we're learning all the time about the evolution of the crisis. A scenario is one possible path through all those probabilities. It's got a little bit of this is the path that has some credibility to it, but it's not the one that you necessarily think is central. And I think both committees thought it would be misleading to say this is our central probability, etc. How then do we deal with your point? Well, shouldn't we be looking at downside risk and testing the extremes? And I don't know where the extremes lie, because I've never seen advanced economies shut down a third of their economy in a matter of weeks before. I think that you do by sensitivities. And so it's an imperfect way, but the way we tried to probe those issues was, let's look at the sensitivities. So in the stress test, banks lose 3.8 percentage points of capital. It's about 45% of the buffers they hold up to before they hit their minimum requirements. We published some mechanical sensitivities about an extra 2 weeks of lockdown, would require around 20 basis points of capital to absorb the losses. You can't do the mechanical calculations because, as Andrew says, you have to work through everything else that is happening. But that gives you an idea of resilience. And I think for the Financial Policy Committee, we normally test the tail of the distribution, but it's very difficult for us to say how far into
So
the
he
tail
seems
we are
to
the
know a
moment,
little bit
and what
more
that
what's
tail,
actually
what
going
that tail
on
looks like.
in the
So that was the
nitty-gritty.
reason for both committees kind of doing something which was not their normal,
Which is
normal practice.
reassuring.
It may well be, as we learn more about
He
the
goes on
health,
the tail end of the
side
distribution
of
where
this,
other
we get a
committees
better
would
feel
use
for what it will take to
little
bring,
sort of
to bring this under
better
control.
cases
We'll be able to go back to a
than base
forecast
case, and he
based
seems to
on,
go
on,
closer to like less
probabilities
than base
and indicate
case
that.
on his
But
analysis.
certainly at the time of the interim FSR, and I think Ben will, I'm sure, come in on this on the NPR, I don't think the committees felt they could do that.
Thank you.
The
I'm
wallpaper is
I
so
suppose I'm still
British
trying to
too,
get
isn't it?
a feel for whether we have. It gives us, policy options if we really drill down into the absolute worst case scenario, because it is unpredictable, like you say, and there are so many epidemiological and other uncertainties. I mean, I think, and tell me if you think my characterization is wrong, but the scenario looks at a recovery that's maybe not V-shaped. It's maybe somewhere in between a V and a U. It's
Okay, let's see
we
what
could
he
discuss
says.
that, but
This will be
there are
important.
lots of other scenarios. So there are, a properly U-shape. We've heard of L-shape,
He's
a
like,
swoosh.
she's basically saying how
we've
fast
heard
we're
of
going to get
square
out of
root,
this.
a big a second peak, for example. I mean, how does it shape up with those different scenarios?
I think that makes the point of
Hey, a Cuban man would look beautiful no matter what.
It's difficult to know. I hear W-shaped as well, so can run through the letters of the alphabet. But I think the underlying point here is what I think Andrew has made clear publicly, is that no financial system is infinitely resilient. I mean, in the end, the financial system lends to the real economy and is exposed to the real economy. And if the real economy is kind of not functioning for an extended period, I don't think the financial system will reflect that.
Yeah,
what we tried to show at that point in time is how resilient was it to one path, and then some sensitivities to give people an idea the risk of if there are other paths. As we go through this, we may come up with a different scenario or a forecast that will enable us to take another judgment. Then one last point, which is, I think the point made on the first question, we also wanted to show to the banks and more generally that it was in their own interest to maintain credit, to roll over credit to the economy and new lending, much of which is government guaranteed, because they had the resilience to do that rather than their natural inclination, which is to pull back on everything. And we just saw how disastrous that was 10 years ago. So this was a way of indicating that they had the buffer space to do that.
So
in
he
this
didn't
scenario.
give
You can then calculate
a good response.
The sensitivities.
He's still hedging. He's a hedger.
And the banks have responded, I think, as Andrew said, pretty well.
So he's sort of like the accountant type of economist, where he's
but in
like,
the end,
well,
if
we got all this
is
data, but it doesn't mean that there's,
an L shape
means anything. This
with
could
no
be a
upward
lot
leg.
worse.
I mean, no financial
She
system
set him up where he
is
said, you know what, things could get a lot better.
And
There's
maybe
lots
just
of
to follow
green
on from that,
shoots and all that kind of
thinking
stuff.
about what
So
would
he
have
didn't
to
say any of
happen
that.
for the banks to, if you like, fail the test. Would they, if they started
Right,
paying
sort of a
out
lawyer
dividends?
response.
I mean, if you couldn't
So
stop
he
them
talked more about what could go wrong
indefinitely paying
than
out
what
dividends,
might be
for
going right.
example, or different scenarios to pack that back into that.
Well, first of all, it's important that they.
So she's trying to push
they
it up,
generate capital,
and he's pushing it
and
back
they don't
down.
pay that capital out, and that was the
He's
reason.
risk averse. He's not going to
for
say
asking them
anything
not
good.
To pay dividends, both in relation to 2019 and
That's going to hurt
and
the
for this
British
year.
people.
And we'll need to see how that evolves further. Second, in the stress test, they take up to, the stress test indicates they could suffer losses up to £80 billion, which is a large, very large hit.
So,
they use up, as I say, 3.8% of their
She
capital,
gave him a slow
but they're
pitch, and he
still,
didn't hit it out of the park.
well above the regulatory minimum. If we saw that they were heading towards the regulatory minimum, then one would have to take other action to deal with that. But it's better to encourage them not to make things worse by cutting back, because then we really would have a credit crunch and a much worse situation for everybody. And B, just demonstrate where they are, admittedly on one scenario.
See, he keeps describing things as how they could be worse. He could say the same thing and have the opposite. So he's like, they shouldn't cut back because then credit facilities wouldn't be available, and that would hurt company growth and all that kind of stuff. If he said the same thing, but from the different point of view, there may not be a need for more credit growth because we already have so much in place, and companies are utilizing it to improve their economic
just
situation.
Make the declaration that I made at the beginning.
It would have a positive spin on the same thing.
Andrew Bailey, that when I was Chief Executive of the British Banks Association, I worked closely with the
anyways,
members of the panel.
He just
I've got
brought
one
things
quick question
down.
for Andrew Bailey, and I emphasised the quick, and then I'm going to target my questions. And Broadbent.
They're saying Bailey talks
my
too much.
Question is just
Doesn't
picking up
say
the point
anything.
about dividends. You made the unprecedented request to banks not to pay out dividends. That's good politics, but also you did it for prudential reasons. Can you imagine, Andrew Bailey?
I'm sorry, I lost the question. You cut out on my line at the point when you were just coming to the question.
Sorry, you requested, made the unprecedented request for banks not to pay out dividends. I said good politics, but you did it for prudential reasons. Can you imagine repeating that request?
Well, let me say a few things. I mean, first of all, we asked the banks to consider very seriously the case of paying dividends, and they decided not to. And let me make a big point about that. When you look at the stress tests that we have published for some years now, we do allow banks to take so-called management actions, which assumed management, obviously because it's a scenario.
See, he's a terrible public speaker.
Taken into account.
He mumbles and
As an
bumbles.
offset to losses in stress. And we're very stringent about what we allow in. We do always get some pretty imaginative things suggested, and we don't allow them. But where a bank has a dividend program and has an established, clear communication that it will reduce it, it hasn't made anything approaching, which it never should do, by the way, an unconditional promise to pay a dividend, which would be nonsense if they did. But some of them get quite.
So he still hasn't answered the question. He should say, well, there were 3 reasons why I asked banks not to do dividends. 1, 2, and 3. Okay, like state your thesis up front and make it clear. Then defend your thesis, offer a counterpoint, offer a conclusion. It's a 2-minute question.
When you look at a stress, and to pick up John's point, where a bank is going down to its minimum capital ratio, of course, it almost by definition would not be earning any return on which a dividend could be paid. So the issue of dividends would become entirely academic.
So they're not doing the Great British Pound any favor here.
So I think that situation would really take over at that point. So I mean, you said it was good politics for the banks not to pay dividends. It was more than that. I mean, it was very sensible from the point of view of the financial position of their balance sheets. And it gives them optionality. I mean, if this whole thing turns out to be much less stressful than we might imagine, and if their earnings turn out to be more robust, then they will get another chance to consider their dividends as time comes round. But for now, it makes, in my view, absolute sense that they concluded that the right thing to do was to essentially preserve those dividends as capital, as own funds, and to use and therefore be able to draw upon them.
I prefer reading the statement.
I want to turn to macroeconomic policy, and my question targeted at
here we
Ben
go.
Baldwin. So John Cunliffe was answering questions there about forecasts. As the Deputy Governor for Monetary Policy, you have to do. He was answering questions about scenarios. You have to base monetary policy on actual forecasts. You study all the economic data coming in. There's increasing speculation that the bounce back will be more prolonged. It won't be that rapid. What sort of bounce back do you think it will be? Do you think there will be a lot of permanent economic scarring?
Good afternoon. Well, as Sir John said, there's huge uncertainty about the potential paths, even...
This guy's particular, huh?
Given the health outlook, I should say, but certainly allowing for that additional uncertainty. There's an enormous amount, which was why, as John explained, we didn't feel able to publish a conventional forecast because we didn't think there were sufficient grounds to say, here's the chance of this versus here's the chance of that. So I will avoid words like will, because I just think they're misplaced. Let me just say something about our scenario and where it fits into projections of some others, maybe a little bit at the end about the very latest evidence for what that is worth. Is not terribly much at this stage.
Forza, the dollar won't be bullish unless the FOMC meeting minutes discuss cutting negative interest rates.
In the middle of the pack on GDP, on growth over the next couple of years, on unemployment and inflation. There's obviously a wide range, but it's more or less in the middle. If one is to use a letter of the alphabet, and I've heard a lot about our scenario being V-shaped, it's a pretty lopsided V. And there is no doubt that in our scenario, the recovery is far from immediate and takes place over a lot longer period of time than the downturn. So GDP...
So no V-shaped recovery.
The scenario falls precipitously in the first half of this year by over a quarter. It doesn't return to that level in the scenario until 2022.
No up until 2022.
Furthermore, unemployment doesn't get back to its
low GDP
until the third quarter
for 2 years.
2022. So what happens in the space of less than 2 months to unemployment then takes well over 2 years to be unwound. So it doesn't feel very much like a V. And you're absolutely right that one of the reasons for that is that even
Forza,
though
how about for the next 5 years?
based on an unwinding of the lockdown that is done by the end of September this year, the MPC did feel that there were significant parts of consumer spending in particular which would continue to be restrained by cautious behaviour on the part of households. Cautious because of uncertainty about the economic outlook, and cautious.
Oh, Forza, I don't know what the hell you want to do.
What we call social consumption, stuff that requires people physically getting together, there will continue to be nervousness about.
Talk to your priest and your bartender, maybe your accountant too.
The vacuum and the health outlook of the virus.
Yeah, these guys are.
There are many other plausible scenarios. And it could be longer. It could be foreseeably shorter. The recovery.
It's interesting because they are making the decisions.
Question about longer.
So they get together and talk about how bad things are.
There were downside risks.
So
there may also be downside risks.
They're classic economists. They're looking backwards and projecting the future based on the past.
We did not allow.
And we're traders where we project into the future.
We allowed only for one type.
And so it's really interesting to see like
the effect of low investment today. And
you know,
over the next
they're saying based on what happened 4 weeks ago, 4 months from now will be very similar.
Productive potential.
And they may be. It may be a self-fulfilling prophecy. They're talking the pound down right now.
Scenario, the productive potential of the economy. If there were big shifts in demand, for example, from one type of consumer spending to another, or indeed from
they're saying GDP will not get back to the previous level, which sucked, by the way. GDP won't get back to the previous level until 2022.
Raise the natural rate of unemployment.
Look, let me tell you how wrong that is.
Undoubtedly, these effects could exist.
See if I can turn this guy down. I don't know if I'm competing with him.
Noticeably different from the average.
Okay.
Of others.
So we have negative GDP right now, correct? So how much improvement do you need on negative GDP to get a positive number?
The latest numbers we have on spending, we look now at a wide array.
You need a very small improvement against a negative number to get a big positive number. So let's say we go from, let's say, negative 4% to positive 1%. On a percentage basis, that's huge. So what he should be thinking is 2021 will have ginormous GDP. We're going to go from negative 4% to positive 4%. And that's way better than where we were in January. Way better. They would have been happy with 2% GDP. Now we'll probably get 4. Now, is the 4 equal to last? No, but relative to current GDP, it'll be significantly higher on a percentage basis.
Traditionally, in a normal economic scenario, you would say that would lead to.
So it's really interesting. They're very, 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 very conservative, and they're making decisions. But the thing is, so like the American point of view, if you're that conservative, then you need to be aggressive in your response. I think the way they come across is they're conservative in their outlook, and therefore they're conservative in their policies. Of course, Carney wouldn't have been that way, right? So they're talking the pound down, right? They don't know, they don't have a solid projection of what's going to happen, and they don't know what to do. So they're going to do nothing. Is kind of what it looks like.
Significant increase in government debt.
You know, like, for example, let me just mute this guy. For example, during a crisis, do you want someone in charge that walks in the room and says, you know what, team, this is totally scary. This is freaking me out. I don't know what's going on. What should we do? Well, we should run and hide, right? I think we should surrender. You want someone to come in and say, we got this. We're going to fix this. This is going to create, we're going to need to be brave. We need to be strong. And we need to be strong in our policies. The world is looking at us to fix this. This is the definition of our professional careers. This is what we'll be remembered for. Ladies and gentlemen of the MPC, let's save Great Britain. And right now they're like, I don't know what to do. We don't know what's going on. None of the models make sense. We don't know where to stick these numbers. Where do we put -4 GDP? There's no space, wow. And it doesn't feel like we are going to fix this. Right? I don't get that message out of them. We are going to fix this. Right? Yeah, they're not very good at this part of their job. Okay, they might be excellent at some other, but I don't know. Right? I don't know. I don't know what they're doing.
All those policies were to pay out, that the sector would be insolvent. So I just wondered why the bank has chosen this moment not to publish the results of the 2019 stress test for insurers.
So, if I may, I think there are two separate things here.
So this is him giving us the rah-rah speech, getting us all fired up.
Policies protect against a pandemic.
Yes, and I'm quite fine for you not to talk about that because we've discussed that with the FCA. I really want to talk about the publication of the stress test.
The stress, the decision not to publish the stress test, I think, was unconnected with the first issue. The issue, I think, was on the stress test was this was the first time that the stress test.
That's what it looks like. I mean, they're even getting pushed around by the people asking questions.
For a couple of years beforehand, and it was to some extent an exploratory test. And when the results came back, it was clear that in order to get a clear enough message for
thank you, Anthony,
it was going to require quite a lot of work to actually go back to the companies and
yeah. So
if you like,
this is
how they had done the test.
Oh my God!
And assess it. And
so I'm very disappointed actually. So I'm glad I watched that. I don't know if they got the cojones. I don't know if they got the cojones to get this job done. Very sad. So they just screwed everything up. They had the opportunity to do something much better. I don't mean they have to spin it. I don't mean they have to lie. But you could answer the same question with the same logic in a much different way. And I don't think anyone believes that they're going to be saved by that crew. There's the guy that babbles on and doesn't seem to say anything. There's the other guy that says he knows what he's talking about, but he can't get any answers because his models don't work. So he's smart, but his models don't work. And then he looks at the camera and he's like, I don't know what to do. I don't know what to do. Right? Like, oh my God. Right? Is that a bad word? So that's really bad. So that's the new crew in charge of the Bank of England, huh? Huh. Okay, I'll have to incorporate that into my analysis. It's good to know who's in charge. Okay? So interesting. So now the next thing, and you're on your own for this one, is download the meeting minutes and read it. I prefer reading anyways because you can cut out all that nonsense. Okay? Hey, why did you force banks to hold their dividend payments? 4 minutes later, he still hasn't stated his thesis. Okay? Should be very easy. Okay? So anyways, whatever. So when you read the FOMC meeting minutes, these people, some members of the committee asked this question, other members of the committee asked that question, other members of the committee had relevant counterpoints to that. You know, all this kind of stuff. You can read it, you can highlight, you can bust it out really quickly. Done, 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 done. If there's any discussion of negative interest rates as being, a possible potential outcome in the near future, U.S. dollar gets strong. Okay? I see the weakness, and I love the weakness. Thank you, weak US dollar. But, oh boy, oh boy, oh boy. No, all I can say is God save the Queen. So, peace on earth. May the pips be with you. May your profits be above average. I'll see you later today. If you're in my live trading group, I'll see you at 5. Remember, in the description below, links to Trader's Way, links to my book, links to the training course, which is almost 80% off, links to my chart templates, which I'm updating with new files today, adding the new installer application and all that. Everyone that has been a customer will get all those upgrades for free because I love you. I'm taking care of you, spending time and money to make you happy and to keep you strong in these times of need. So I appreciate you and all that you do. I'm here for you. I love you, but I got to jump, babe. It was real.